Hey guys, Kunal here, Bulls on Wall Street. Guys, I want to talk to you guys a little bit about the 7 deadly trading sins to avoid as a trader. As the year is winding down and we're starting to compile our goals and plans for 2019, I want to take a second to really talk about the things in trading that hold us back. Right now, you guys are experiencing tremendous market volatility, right? It looks like we are in the cusp of a bear market. So many stocks have fallen 30, 40, 50%. The volatility has been crazy. The market was down 600 points on Friday. Like, when does that happen in a bull market? Well, volatility is exciting. As day traders, we're taught to really love volatility, but that's not really the case. Volatility makes us emotional. It brings out the devil in us sometimes, because when the market is volatile, it makes us have to make quicker decisions. Each decision carries inherently more risk as there's just more movement and chop, and all of a sudden, all those things that we thought we had put back in the closet start to come out. We start to revenge trade. We start to gamble. We start to oversize, right? All those things that hold us back. And as new traders and even experienced traders, when the markets get volatile, all of these things come into play. And it's really important to not only recognize when they're happening, but have a plan so that when you're doing it, you can nip it in the bud and move on from it quickly. So what I'm going to do over the next 7 days is take a losing trade that I've done personally recently and apply it to these 7 deadly trading sins. And let's see if we can take some of my pain, some of my losses, and turn it into a learning experience so that as this volatility continues in 2019, which it really looks like it's going to, we can be aware of it, but most importantly, have a plan of attack so that when it happens, we're not letting it just blow up our account. So let's talk first about revenge trading. I think for me, this personally is the biggest one. You know, revenge trading is that moment where, like, you're in a stock and you have this picture perfect plan. You know, everybody's talking about it. It's on your scanner. You've had a plan thought up and you're thinking this is going to be your big one, right? And all of a sudden, you know, it goes up a little bit and it goes down and you end up taking a loss on it. And next thing you know, as soon as you sell, that stock starts to make its way back higher and you're thinking, oh my gosh, I just sold this on support. And so what do you end up doing? You chase it back higher. Well, what happens after you inevitably chase anything on strength like that? It's got to retrace a little bit. So then it starts to come back down, and guess what happens? You sell it on support. Next thing you know, this thing is bouncing back, and you chase it back higher, and then what happens? You sell it on support. And now you're stuck in this spin cycle of despair that really can take something that's really something innocent, right? A small loss where maybe you mistimed the entry or you chased it, and now you're kind of adding them on top of each other. That small loss, you add another one and another one and another one. As you keep getting into it, revenge trading it, before you know it, that one small loss turns into a series of small losses, which turns into a big loss. It's the easiest way to turn what's in just a small red day into an account blow up. This happens because we start to get emotional. We start to force trades based on emotion. You know, when we have especially smaller accounts, this really comes into play, because when you're trading like a smaller account, like when you're brand new, you know, you're always looking for like that home run, right? Like, I got to get into that big trade and grow my account. And what usually happens is you spot the big trade, you know this could be something huge for you, and then you screw up the entry or the exit or something in that trade management, and now it turned into a loss, and you're thinking, man, I had this shot. And so now you start spin cycle of despair. You chase it back up, comes back down, you sell it. You chase it back up. And what ends up happening when you're revenge trading, and this is really the irony of it all, is every time you sell, that ends up really being the buy spot. And every time you buy, that ends up being really the sell spot. Have you ever thought about this? Have you ever thought when you're in a trade and you're thinking like, man, it's like if I did the exact opposite of everything that I do personally, I would be rich. I would just have to do the opposite. Well, that's revenge trading in a nutshell. Revenge trading can be so bad because it can take a new trader out of the game for good. Not only do the losses pile up, but you got to remember the commissions, right? When you're just kind of spin cycling it back and forth, and before you know it, you've got 50 tickets or 50 executions under your belt on that trade, and you're like, whew, $5, $5, $5, $5, $5. Well, all of a sudden, all those tickets, those commissions really add up too, and now it's just adding on to the losses, right? It's really piling it on. And guys, once you spiral out of control, you're out of the game for a while. You may not even want to come back. What I've noticed from my students, right, teaching just thousands of students over the years, is that you need a good kind of 6 months of screen time under your belt to really build intuition and feel confident in the trading patterns and the discipline that you need to really get going. So typically what happens is, it's kind of the cycle, right? You take class, all right? Once you're done with class, you hop on a simulator for a while, all right? You hop on the simulator, now it's your live account, right? You're in the big time. And you still need 6 months, right? You need that screen time. But what happens is if you blow up your account in month 1 because you start gambling and revenge trading, you're on the bench for a while. So now you're back in class, you're back on simulator, but you still need that 6 months. And so then you come back live after you save some money and you get back into it. And right, you've just now taken a really kind of big circle to get where you need to go. Where a lot of times if you're brand new, but you have really good risk management and personal management, even if you're not grinding out wins, but you're not having big losses, you could just kind of break even or have small losing days. And you could just kind of keep that account floating. Even if it's not all there, what'll happen is over the course of months, you'll start to build intuition. You start to see all the angles in the trades. See, when you're new, you're kind of trading off a checklist, right? It's like, okay, is the moving average here? Do I have this pattern, right? And you're kind of, it's not clean, it's not fluid. But what happens after you take 1,000 trades or 2,000 trades, right? You're not working off that checklist. Now you're just, right, reacting to what the market's showing you. You've got your plan and you're just acting on it. You're moving real fluid. And so in the beginning, the whole goal is just to not get yourself out of that game so that you can get that screen time so that now you can move freely. But if you knock yourself off too quick, then you've got to start that whole cycle again of class, simulator, journal, account, right? And if you go through that a few rounds, it's like in the end, you wasted so much time when you could have just managed your risk a little bit better and you would have been able to stay in the game. So how do you avoid revenge trading, right? How do you avoid revenge trading? Number one, I think is really important is use a daily max loss, right? As traders, we have only an X amount of capital. So applying a daily max loss to your account on how much you're willing to lose in a day before you just have to stop trading is going to be really important. So say you have $20,000, right? I'm just making up a number, right? And you're going to say like, okay, I can't lose more than $500 in a day or $1,000 in a day, right? And when that happens, you walk away. So what happens if you could do that is you're staying away from that big loss, right? It's really those kind of $5,000, $10,000 days that really get you. It's those days where you lose 25% or 50% of your account because you're revenge trading, you're on margin, you're trading junk you shouldn't do. Those are the days that really hurt, right? Those are the days that take months months to come back from. But if you apply, say, a 5% max loss on your account, well, you can lose for a few days in a row before you're really kind of feeling the pain. So that's going to be really, really important. Number two, stick to your rules, right? Keep those red days under control. Now, it's easier said than done. What are some things that you can do to help with the accountability of that? Well, let's think about it like this. Get accountability buddy, right? Share your trades with a peer, right? Not everybody's going to have a coach or somebody like that you could just bother all the time, right? Some of you guys are self-learners or self-starters. You're doing this on your own. Get a trading buddy, right? An accountability partner that you share your trades with. That can help have somebody else give you an ear and maybe even a mouthful when you're acting bad. Now, let's take a look at a particular trade that I did and think about like kind of what revenge trading is and how we can stay away from it. So, recently I took a trade in this UGAS. So UGAS is probably something you guys have seen over the last month. It has gone up from like $20 all the way up to $200, just this epic run. It oftentimes has an intraday range of like $30 or $40. When I see something like that, I get really, really excited. But you know what? It also can cause tremendous stress and trading mistakes because that range can lull you into thinking, here is going to be the best day of my life, the biggest day of my trading career. But you think it every day because the range is just so big, right? And that's what kind of has happened to me a couple times on this thing. So let's talk a little bit about this trade. So you guys had this big run the previous day. You see that? And then the next day it kind of opened down weak. And as it opened down weak, I'm thinking like, okay, this thing's going to go red to green and go on another big run. But what ends up happening is it goes sideways for just a little period of time and then finally comes out of range and breaks over that VWAP, okay? That's like your telltale kind of sign that, okay, late in the day, you may make a push. So I add this stock for a potential run. Nothing crazy, but just a starter position, 100 shares. This thing's got a crazy range, right? Could pop $15, $20, $30. So what ends up happening is this stock runs all the way up to 171, right? And I scale out a partial position of mine, and then I'm holding the rest for like a bigger move. And then just out of nowhere, this thing dumps 10 points in like 10 minutes, all right? Now I've given back like half of my profits on just like this quick dump. And so, as this thing is coming back down, I'm like, shit, right? So I end up selling it and stopping out of the position. I end up taking a small gain on it. But lo and behold, look what happens on this thing. It ends up holding support. And this always happens in revenge trading. You end up selling the support. So it ends up holding support at the 9 EMA, and it starts to curl its way back up. And as it's curling its way back up, I'm like, oh, man, like I sold it at the lows, right? And so, it ends up kind of breaking back out over here, and I re-add this thing. Now, it pops up like 4 points after I add it, and I'm like, woo, right, here we go. Like this thing's going to be my big winner for today. And then lo and behold, it just dumps out of nowhere, gets below my buy price, and I end up stopping out of this thing and taking a small loss on it. Well, now, right, I've given back half my profits, and then the next one I've taken a small loss, and then lo and behold, what happens is it starts to bounce. And I'm like, crap, I sold down support again, right? And next thing you know, like it's like starting to kind of flag out, and I rebuy as it's breaking trend line, and then whoosh, this thing gets dusted again. So what ended up being like this awesome early entry ends up being like one half trade. The first one ends up, I give them back half the profits. The next two end up being duds. And I ended up taking a loss on this trade after I had a big gain on it, or a decent sized gain. And the mistake I make, and this always happens with revenge trading, is like this last one, rather than going 100 shares, I went 200 shares. So when it dumps out like that, right? Now all of a sudden your losses are double. One thing to remember when you're trading, especially when it comes to revenge trading, is your primary entry is going to be your most important one. A stock, most powerful entry is going to be the one that's coming off of its bottom, its original break, right? That's going to be like your lowest risk, highest probability trade. As you get later into the day and you start to see patterns, those are going to be less probability if the stock has already moved a significant amount. The harder it goes up, the longer your secondary and third patterns have to be typically. The ones that I was taking after were just not that high probability, and they were definitely higher risk than my original entry, which I had timed perfectly. I had just mismanaged the trade. And so next thing you know, revenge trading comes into play, guys. And that's going to be really, really important. Like, watch that second entry and that third entry, because if you start taking them over and over, that's a good shot that you're revenge trading, and what turned out to be something real innocent ruins your day. It's like on that particular day, I was green on the day. I was up on the day. And the next thing you know, right, I get back all my profits, and I went negative on the day, which is a big no-no. So I'm going to be going more in depth into these things on December 17th, 8 p.m. Eastern time for a full breakdown on the 7 deadly sins of trading. I'm going to make you a few more videos also to go with these, but mark it on your calendar. It would be an honor to have you guys in this class so that we can really talk about this and hit 2019 full speed ahead. Guys, let me know if you have any questions. Leave me any comments. As always, you can email me, canal00@gmail.com, or hit me up on the Bulls on Wall Street website. I love hearing from people. You guys, email me and ask me any questions you want, or just leave me any comments, and I will make sure to answer you guys back. Take care.